Let's talk charts and, of course, the dynamics we've seen lately in a market where the Nasdaq has been weakest and the Dow's at all-time highs. Helene Meisler joins us, contributor at realmoney.com. Helene, have you ever seen a market this bifurcated, the either-or market, as you call it? It's pretty crazy. We're at highs in the Dow and the Nasdaq has been in correction territory.
Well, didn't we have an either-or market back in the late 90s? I mean, tech went up, everything else went down. The difference is now is sometimes, a couple of weeks we'll have tech is hot, and then a couple of weeks we'll have everything else is hot. So it keeps rotating this time.
How does one analyze a market using some of these technical tools of breadth and the things you and I always like to talk about when it seems like you have to be so specific about certain indexes or certain cohorts, right? It's like the reopening trade and the quarantine trade. I mean, how do we use these metrics? Are they still usable, things like breadth in a market so mixed up like this?
Well, I always think they are. So let me just back up a bit. I think back in January and early part of February, we had a lot of speculation in the market. We didn't have it in what everyone calls the reopening trade. What we had it in was SPACs and, that whole Reddit, the GME thing was a sideshow, but definitely in the SPACs and EV and pot stocks, all that hot space, that was, I hate to say it can't go on. It's just not sustainable to have that kind of speculation. Mm-hmm. And along with that, we had very high readings and bullishness. But what happened is all of that came down in the end of February. And so the bullishness came off the boil because of that. And so I think that's sort of where we're now. And the narrative has now become, well, we have to own the reopening stocks and you can't own high growth stocks. And I'm not sure that it's an either or for months and months and months on end. I think, that'll switch back and forth.
So we're in this kind of, turning point to some extent. And within all of this, I really like that you bring up the SPAC stuff still. I mean, I think that's such an important thing here. We've been talking a lot about bonds and debating the interplay with equities. And while that may be a very important thing in this short-term moment, it's kind of obscured the fact that we might not have even needed any reason for things to just pull back, right? I mean, so many measures of sentiment elevated, so many measures of froth very high. So now I guess the question is, how do we gauge if the stuff that has weakened in this market, probably the Nasdaq, I would guess, if we look at some of your metrics here, overbought, oversold, what do you see? Does it seem like we've got enough pain out to clean that stuff out?
I think we got grossly oversold last week. You can see it on that chart of the overbought, oversold oscillator. This is the Nasdaq. If you looked at the New York Stock Exchange, it's already up over that zero line. So you can see it's acted much different than the Nasdaq oscillator. And I think there's room to move to an overbought condition in Nasdaq. So I'm not nearly as negative on Nasdaq in the near term as it seems almost everybody else is.
Interesting. So the bounce that we got on Tuesday, that was pretty wild. But you're saying basically that was just enough kind of to get us out of this extreme oversold condition that we were in.
Yeah, but we also had, I have a chart there of the number of stocks making new lows. Last Thursday, there were 313 stocks that made new lows on NASDAQ. And Friday morning, we made a lower low in NASDAQ, and there were only 200 stocks that made new lows, which means that the selling, despite NASDAQ making a lower low, the selling was drying up already. And to me, that's a sign that it had gotten too much and had gone too far, and now it's time to revert to a rally.
So what's interesting here is that the new lows and new highs, I mean, I guess when we focus in on the NASDAQ, right, then we're going to kind of lose some of those other cyclical stocks that might be at the highs. So those are going to be, for the most part, I mean, some of them are in here. You've got some airlines and stuff at the NASDAQ, but obviously this is going to look a lot different if you look at the Dow or something, right?
Well, actually, what's really kind of curious is on the day that NASDAQ rallied strongly the other day, there were only like 1,300 and something, 300 and something stocks making new highs, because it was primarily all that big cap growth stuff rallied. But on a day like yesterday, where Nasdaq was down a few bucks on the day, because again, the index movers were down, you had over 400 stocks making new highs.
Wow.
So there's a whole world out there on Nasdaq that perhaps is being not captured in the indexes.
Fascinating. Now, so if we were to break down again, Helene, basically it seems like, and I'm paraphrasing here, so definitely correct me if I'm oversimplifying, but it seems like if we were to break down again lower in the NASDAQ, that would be a very, very extreme type of oversold nature. It seems like, because basically after the bounce, if we go back to the overbought, oversold, we're not into an overbought territory again. We're not even back to neutral. So further selling from here would mean that there is a lot of conviction in the selling and in this kind of potential for a downtrend.
Yes. So the sequence I would say I see is we'll move to some sort of an overbought condition. Perhaps all that chatter of how you have to hate growth goes away and people start to warm up a little bit, and oh well, I can see some value in Facebook, and okay, maybe Amazon can move up, and
right.
Maybe Apple isn't so bad, and you start to get that sort of chatter probably just around the time you get overbought.
Interesting.
And then you can come down again. In other words, I think the kind of action that we saw in January and early February, that highly speculative nature in the market, doesn't give way to, oh, let's just return to the way it was. It tends to give way to a lot more volatility, ups and downs in the ensuing months.
So that's kind of what we've seen too, is VIX just won't break 20. The sentiment survey, the one you've got here, I'm looking at Investors Intelligence. To your point, this has dropped pretty significantly back down to something more neutral. Is this one of the key kind of parts of the thesis here, that maybe there is some degree of appetite returning a little bit, or at least just kind of that froth getting cleared out, I should say?
Right. You can see as we headed into the beginning of the year, in January, we were pushing up at almost 65% bulls, which is just
wow,
amazingly high. It's really very extreme. And I mean, I've matched it up with the S&P there, where in fact, I probably should have matched up with Nasdaq, because then it looks much more, appropriate. But now you can see we've gone from 65% bulls down to 51. And 51 is where we were at after the September decline. And even after the September decline in NASDAQ, we saw that big rally into early October, then we saw us come down again into late October. I mean, that's what I mean. It's just, you tend to have a lot more ups and downs and swings after that kind of a decline.
Wow, in February, just going back to the COVID sell-off, this thing kept going lower and lower as the market was going lower. Helene, when we look at the kind of shorter term here, one of the things I thought was interesting, and this could be just too kind of a myopic day to day, but we had this big push on Tuesday, and then yesterday the NASDAQ opened up, faded. It didn't seem like the type of follow through you'd want if this is the beginning of a push back, to some trend higher. I mean, like Tesla was the most oversold. You haven't had an opportunity like that to buy Tesla. I mean, obviously you had this huge run, 20% a day, and then just kind of fizzled the next one. Does that mean anything, the fact that we couldn't string together a couple back-to-back gains? And, well, we were up 2% and then just gave it all up.
Well, think about it like this. For how many years? At least 5, maybe 6 or 7. These have been the go-to stocks. Every single correction we've had, what stocks do you want to go into? You don't want to go into energy stocks. You wanted to go back into tech. And right now that's sort of changing. And there, look at the chart on my wall. That's Chevron. I mean, I don't know if you can see it, but it's starting to look like a tech stock. Every single dip gets bought. So it's all you're doing is you're just switching the leadership in the market for right now. And so no, it doesn't surprise me at all that a stock that goes up 20% gets sold. And could it go up another 20% over the next few days? Sure, it's Tesla.
Helene, I love the Chevron chart. The last thing I want to ask, I mean, just kind of off the cuff here, because you draw all these charts, you know which ones are more themed into the reopening. which ones look better generally speaking? The quarantine tech stuff or these reopening stocks? Which ones do you generally want to own more of right now based on the technicals?
Oh, well, surely you want to own the reopening stocks
Okay.
I would say on a longer term basis. Right now, I think overdone, and I think the tech stocks look more oversold right now.
Right.
Like over the course of the next couple of weeks.
So
But
if you want to bet on
over the
trend
long
reversal
term,
tech.
Chevron has a better chart.
Okay, all right. I like it. Helene, great to catch up. Always fun.
Thanks.
Thanks a lot,
See ya.
Helene Meisler, contributor at realmoney.com. Love the charts on the wall. She's right. Chevron just keeps on cruising.